Never fight the trend. It sounds simple, yet it is one of the hardest lessons for traders and investors to accept. Most people enter the market believing they need to predict exactly where prices will go next. They want to buy at the absolute bottom and sell at the absolute top. They believe success comes from making perfect predictions. Jesse Livermore believed otherwise. He learned through years of experience that the market doesn't reward stubbornness. It rewards those who observe, adapt, and respect what the market is actually doing. One of the greatest mistakes any trader can make is believing they know better than the market. Every day, millions of participants around the world are buying and selling based on information, expectations, emotions, and economic events. The price you see on a chart is the result of all those decisions combined. Instead of arguing with that reality, Livermore believed it was better to study it. The market has one language, and that language is price. Price reflects everything happening beneath the surface. News, earnings, economic data, investor confidence, fear, optimism, and uncertainty eventually show themselves in price movement. Rather than trying to predict what should happen, Livermore focused on understanding what was already happening. Many traders lose money because they confuse opinions with evidence. They believe a stock has risen too much, so they assume it must fall. Or they believe a stock has fallen enough, so they assume it must recover. These assumptions often have nothing to do with what the market is actually saying. The market doesn't move because someone thinks it should. It moves because buyers and sellers are making decisions with real money. A strong trend often continues much longer than most people expect. During a bull market, people constantly look for reasons why prices should fall. During a bear market, they keep searching for reasons why prices should recover. Livermore understood that fighting these powerful movements usually ends badly. Imagine standing in the middle of a river with a powerful current flowing around you. You could spend all your energy trying to swim against the current, or you could move with it. The river doesn't care about your opinion. It simply continues flowing. Markets behave in much the same way. The trend represents the combined force of thousands or even millions of participants. Trying to stop that movement with a personal opinion is rarely a winning strategy. This doesn't mean every trend lasts forever. Every trend eventually ends. The challenge is that no one knows exactly when that moment will arrive. Many traders lose fortunes because they try to predict reversals too early. They see a market making new highs and immediately believe it has gone too far. They begin selling while the trend continues higher for weeks or even months. Others watch prices collapse and convince themselves that the bottom has arrived. They keep buying as prices continue falling. Livermore preferred patience over prediction. He was willing to wait until the market clearly showed signs that the trend had changed. Patience is one of the rarest qualities in financial markets. People often feel uncomfortable doing nothing. They believe they must always be buying or selling. They mistake activity for progress. Livermore understood something different. Sometimes the most profitable decision is to wait. Waiting allows uncertainty to become clarity. Instead of forcing trades based on emotions, patient traders allow the market to reveal its direction. This approach requires discipline. Discipline means accepting that opportunities will always exist in the future. There is no need to chase every price movement. There is no need to prove that you can predict every turning point. There is only a need to manage risk and participate when the probabilities are in your favor. One reason trends become so powerful is human psychology. People are naturally influenced by the actions of others. When prices rise, confidence increases. More buyers enter the market. As more buyers appear, prices rise further. That attracts even more buyers. This creates momentum. The same process works in reverse. When prices begin falling, fear spreads. Investors rush to sell. More selling creates even lower prices. Those lower prices generate even more fear. This cycle continues until sentiment eventually changes. Livermore understood these emotional cycles long before modern behavioral finance became popular. He knew that markets are driven not only by numbers, but also by human emotions. Fear and greed have existed for centuries. Technology changes, markets evolve, trading platforms improve, but human psychology remains remarkably consistent. That is why many of Livermore's principles continue to be discussed today. Following the trend does not mean blindly buying every rising market. It means allowing evidence to guide decisions. Evidence is stronger than hope. Evidence is stronger than fear. Evidence is stronger than personal opinions. Successful traders develop the ability to separate emotions from facts. They recognize when the market is strong. They recognize when the market is weak. Most importantly, they avoid fighting clear trends simply because they believe prices have moved too far. Another valuable lesson is humility. The market is larger than any individual. No trader controls it. No investor can force it to agree with their expectations. Humility allows traders to admit when they are wrong. Instead of defending losing positions, they adjust. Instead of hoping the market changes, they respond to reality. This flexibility is one of the greatest competitive advantages any trader can develop. Many beginners focus on being right. Experienced traders focus on making good decisions. Those are not always the same thing. Even excellent trades sometimes lose money. Even poor decisions occasionally make money. The goal is not perfection. The goal is consistency. Livermore believed that consistent success came from following sound principles repeatedly over long periods of time. One of those principles was respecting the trend. Instead of asking whether the market should rise or fall, ask a simpler question. What is the market doing right now? That question removes emotion. It replaces opinion with observation. It encourages patience instead of impulsiveness. It shifts attention away from prediction and toward evidence. In the end, markets will continue doing what they have always done. They will rise, they will fall, they will surprise everyone. No one can control those movements. But every trader can choose how they respond. The lesson is timeless. Do not fight the trend simply because it disagrees with your opinion. Observe carefully, wait patiently. Manage your risk. Respect the market. Because the market does not reward those who insist on being right. It rewards those who are willing to adapt.